Hey new traders, have you been struggling with directional bias? Well, in this video, I'll be discussing the only indicator I used to use that helped me find directional bias, and I'm pretty sure it could do the same for you. With that being said, let's get to it. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt, and I teach traders how to become profitable by teaching them different tips and strategies. So as a new trader, this was the first indicator and really the only indicator I ever really used to help me with my directional bias. And first of all, I'm going to show you how you set it up. So in TradingView, you want to go to this. This is indicators. And you want to type in an average. You want to click on it twice so you get two of them because you need two moving averages. And you want to click on the wheel for settings. And you want to change your input. My input's already here because I already have it set. But for the first one, you want to make sure the length is at 9. And you could put color, whatever color you want. For me, I'm just going to use, I'll use black for the first one. And for the second one, the input, you want to put it at 18. So 9 and 18 for the moving averages. And for this one, I'm going to make it blue. Actually, that color is a bit too close to the black. Let me light it up a bit. All right, so the moving average is set. Okay, so this is a daily chart, as you can see. So for the moving averages, pretty much you want to see them cross each other. You want to see the black. When it's an uptrend, you want to see the black crossover to the upside, and the blue moving average is below that. And in a downtrend, you want to see it, the black cross to the downside with the blue moving average above it. So when it's an uptrend, the black moving average, the 9 moving average is up. It's the closest. It's up and it's the closest. And in a downtrend, the moving average is down below the blue one. So one more time. It crosses over the upside. For the upside, you want to see the 9 moving average cross above the 18 moving average. And for the downside, you want to see the 9 moving average move below the 18 moving average. So straight, simple, straight to the point. So, okay. Let's see. Okay, so right here, you guys can see I have a big consolidation right here. All right. This whole thing consolidating. Well, what do you guys see? Let me change this color so you guys can see more clearly. Okay. Zoom in a bit. So this is consolidation. All this is consolidation. So for me, I wouldn't really trade in a consolidation. I'll wait for a more clear move. But if you do decide to trade in consolidation, whichever side this moving average is on, you want to trade in that direction. So, like I said in the beginning, if it's above the blue moving average, you want to trade, you want to buy. And if it's below the blue moving average, the 18, you want to sell. So right here, at this point, once this moving averages cross over, right here, at this point, you can look for a sell. But the way I'll look for a sell, I'll look for more so of it bouncing off the moving average. So something like this. When it pulls back, I wait for a push below the moving average and a pull back to the moving average. And then I enter right here. And all this, you can enter right here, you can enter right here, and watch it go down. At some points when I pull back to the moving average, once it pulls back, you can look to sell once again off of the moving average, off of the 8 moving average. So this wasn't the greatest example, but I told you before that 3-pin pattern, 1, 2, 3. So off that moving average, once you see that pattern, you could be a seller. Sell right here. You stop right here, looking to take out lows. All of this, there's so many opportunities to go short because it's bouncing off. You can see it's like a magnet, so it'll pull price back to it. And all of this is just bouncing off the moving average. You can look to go short at all these positions. So pull back. So the best way to do it, I'll wait for like a blue candle, which is a bullish candle, to pull back to the moving average, and I'll sell it with that three three wick pattern I taught y'all in the other video. So 1, 2, 3 with the shorter lows on both ends, and then you could go short. Okay? And then what do we have here? The moving average gets closer, starts consolidate for a bit, it drops down, and then eventually it crosses over. Crosses over, pull back, and then once again, could be a buyer right here. Once you see this red candle form, and hit the moving average, you can enter right there, and it takes off. You look to take out these highs. And then moving average crosses over again. Pulls back. 1, 2, 3, right here. You can enter right here. Actually, I wouldn't enter right there because it hasn't crossed over yet. So I wouldn't go for a sell just yet. See, this Just testing you guys, but you gotta be on point. You gotta wait for it to actually cross over to look for a sell. So it crosses over right here. It pulls back. You could sell right here, and then look to take out these lows, which it eventually does. And then eventually it finally crosses again, pulls back, move out, crosses over, and you could be a buyer. And just hold it till it takes out these highs or take partials out, whichever way you want to trade it, and then wait for it to cross over again. So this definitely helps you with your directional bias. With the moving average, once you see it start to spread out a lot, then you know you got a stronger, very strong trend. As well as if you have the daily and the 4 hour the same direction. So look, so daily was going down, the 4 hour as well is going down. So that lets you know you got a very strong trend, right? Now you could go down to the 1 hour. The 1 hour is up at the moment, right? The only thing you have to wait for, since the 4 hour and the daily are in the down direction, you just wait for this 1 hour to cross over. Once you see the 1 hour crossover, like something like this, as soon as you see this 1 hour crossover and you see it pull back like this, you could be a seller. You stop right here. So that will definitely give you a tighter stop. You'll be a seller right here. Bit of drawdown. It goes down. Once it gets away from it, it pulls back to the 1 hour. You could be a seller again. It drops down. But look, this one, if you put your stop right here, you might have got stopped. Well, you would have got stopped out. So let's do another pair. Do gold. Okay, so let's go to daily. So right now, currently on a daily, the market is showing a downtrend because the moving average crossed to the downside. Go to 4 hour. I like this actually. So all of this is on the downside. As well, the 4 hours on the downside. So like I said, you wait for the pullback and you can sell. So daily, 4 hour, you want them both to be in the same direction, and then you just go to down to the 1 hour. So once you have the daily and 4 hour in the same direction, you can look to the 1 hour and wait for that to cross over. So all three have to be going in the same direction for you to be a seller. So this already crossed over. Wait for the pullback. You also have that 3 wick pattern I told you guys about earlier. To be a seller right here. Zoom in a bit. Could be a seller right here. Once it pulls back to the moving average, and it's gone. It pulls back, still looking for sells. It continues dropping. and you get out once you see the 1 hour moving average crosses over. So that's it for moving average. This is the only indicator I'll use as a beginner to help you with directional bias. If this video was informative, please leave a comment, hit the like button, and subscribe to the channel, as well as the notification button. And I hope you guys have a wonderful day, and I'm out.